Good morning, everyone. Welcome to GPA Trading Services live trading class on this Tuesday, June the 10th, 2025. As you know, today is Tuesday, Gary's Market Forecast or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart, quick overview. Wave one is done when we reached our 114.72 high. And since then, about 3 years ago, we talked about this deep retracement that was long overdue. We're expecting about a 78.6% retracement, which is roughly around 80. And that comes from back in 2007. We bottomed at around this price of 70.53. 15 years later, when we discussed that this was expected to go up to 115, 120, we reached 114.72. Not too shabby. And since then, we talked about this reversal. Now, remember, this reversal is for a retracement before then reversing going higher, not a collapse where we go and make new lows and continue down. So as much as the dollar index is currently hated by hedge funds and a lot of those big players out there, this is simply going to be a retracement, in my humble opinion, and then it's going to reverse and go higher. Now, we're still stuck, Emil, James, Ian, we're stuck right there where we're at a 38.2%, which is from this swing point low, but from the COVID low to the swing point high, we're stuck right at that 618 retracement, which again is very important. Once we break it, it opens the tone and the idea technically that we're going much lower, and that opens up the 85, 82 targets based on extensions. So jumping into the charting platform, we're going to go back to where that dollar index reached that COVID low, which is over here. And like I was mentioning, from this low to that high, it is a 618 retracement that we came down and bounced, and we're still right at that level, still testing it. So this is important. If we're able to close below this area, we need a candle body, not a wick. So that 618 level's holding. So if we can get a close below this area, this big pink box is very important. First off, if we close below this 98 area with a candle body, not the wick, then it sets the tone. We're shooting for a high probability of the 1448, the 1272, and using our arrows, once we close below this 98 area, that sets the tone. We got a 75% chance we're going to go down to 85. 70 plus, we're going to go to 82. That is awfully close to our target zone. So this is why this level is so critical. And it wouldn't surprise me, as it already hasn't. We've been bouncing in this zone for weeks. This thing could, just climb up in this area for a while before we finally, I expect we'll probably take months before we go through this 98 and down at the lower part of this pink box, this 94 area. It might take months. Maybe we dip in here, we retrace, we kind of chop around. This thing might take months before we clear this big support zone. It's pink for subliminal message reasons that I think we will ultimately break through this to start heading toward our target zone, which we're talking about 80, but 75% once we start breaking below 98, we're going to 85, 70 plus, we're going to 82. And again, that's the area in which we're talking about. So when you zoom in, you can see we just been bouncing right in there, struggling to make any headway for multiple days now. We bounced off of the zone. We went up like a three-wave type of move, and kind of an ugly three-wave type of move. But then this doesn't really look like a 1-2. Maybe it's a 1-2, 1-2, but it sure is accumulating and just kind of sitting here and still failing to break this low. So I do think there's a much greater chance we're likely going to break down toward these next extensions, this 97, 96 level, then I think we're going to go breaking out. But since on this bounce, we never reached the magic Fibo, that's this ribbon right here, this orange color ribbon, and it's critical. We didn't reach it, which I thought we might when this was kind of climbing. I thought we might go up here to test it, then fail, but we haven't, and we're still grinding. So this is critical zone. Do we finally break this swing point low to set up? We're going to this 97, 96 area, potentially continuation down to 95. Or do we actually bounce and go up here and test this prior level, which is the magic Fibo? Again, it is sloping downward with all this sideways movement, and the bigger move down, it started to flip into a downward direction. So every day you get a new candle, this is on a daily chart, this will continue to move a little bit, move a little bit. If we start rallying back up towards it, it might start to flatten out. But this still is possible. I don't think it's as high a probability. So we need to not only rally, but we need to take out this pink box to the upside. So we're stuck in support. We're stuck below resistance. So prove it to me. A lot of markets right now are kind of stuck in those zones between support and resistance. And up and until we break one way or the other, then we have extremely high probability outcome where the markets are likely to go. So again, if we come down and break this swing point low, I think we're definitely going to go a point or two lower to that 97, 96 target, potentially continuation down to 95. But if this continues to hold and we do grind back up toward this 102 and change, 101 and change, and we break that, then the highest probability we're going to go test that magic Fibo. Got it? So this has been boring watching this just kind of chop and grind. So our euro dollar, pound dollar trades has just been chopping just like the dollar index has been chopping. Are we going to go up? Or are we going to go down? What's it going to be? We shall see. So in the interim, I would not expect huge movements either way until finally price proves itself by breaking the low to go lower, or by breaking this resistance zone up here to go higher. And again, what I mean by higher, likely we might test the magic Fibo since we didn't quite do it there. And if this is an A, this is a B, we go up in a bigger degree C, then it still says we're likely going much lower. So nothing about this, even though we're holding that COVID low of the 618 retracement, says we're ready to go breaking out. But again, I do want to show it because I would be remiss if I didn't bring that in the conversation. If this holds and we go breaking this resistance, we break the magic Fibo, then we have to break this pink box up here. And if that happens, then we're likely going to make some new highs. Very likely. We'd come to this target first. And if we break all of that, which is this bigger degree pink box up here, which is from the previous high to low, that 114 high up here to low, and we start breaking that zone, then we got a 75% chance we're going to 117, 70 plus, we're going to 119. So this is not out of the question that this could possibly start to rally. Remember, the dollar is only supposed to make a retracement, not off the COVID low, but the much lower low, which would have to go to a higher time frame down at this 70 level down here. So this is the level we believe that we are going to go and do a 618786 retracement on from this swing point low, not the COVID low over here. So we're already testing the 618. That's why if we break it, 618786, we break that, then say hello to my friends down here, which is right into the area of from this swing point low back in 2007. That's the 618786 retracement zone we're looking for. So when you go over to this chart, this is exactly what we're looking for. From that swing point high, from this low to that high, we're looking at a 618786 retracement. And I'm thinking we're going to do a deeper toward the 786 mark, not just a 618. Fair enough? So this is where this comes from. So we're not thinking just from this swing point low to that swing point, we're going to get 618786 retracement because we're already testing the 618 now. Once it breaks, then the rule says you close below that 618, you have a 75% chance you're going to go to the extension down here at 85, a 70 plus, we're going to go to 82. And that's what I keep showing over here, that if we go breaking below, and now we'll go back from this view back to our current view, that if we go breaking the 618 off of the COVID low, this is the COVID low, then this is likely going to set up, we're going to 85, 82, and that's kind of in the ballpark where we're expecting this retracement to finally end. Fair enough? But up until we finally get break of this level, and it's quite a level from 98 down to about 94.50, that's a few points. So this is why I don't think the moment we break 98 that we're just going to go straight down and break 94. And okay, well, once we break 98, we should be at 85, over 10 plus point move down in a matter of days, weeks, or even months. That's why I still think by the time we get down to this target zone, we're probably a few more years out. I told you when we topped that it would be multiple years, not just a year or two, but multiple years before we got down here. And here it is 3 years in it, and we still haven't broken the 618 yet to even get as close to this target. So if it took 3 years to get here, maybe it's 3 more years to get down here. But just it could happen much sooner, certainly. But just remember the big picture. The big picture is this. All we're looking for is a retracement to then, once wave two is done, we go breaking out to new highs in a wave three off the chart up there. So this was never a decline where it would continue to go. It's a retracement before another big surge higher. Fair enough? All right. So any questions on the dollar index as we zoom in on current price action? That's the hard right edge. And I know there's nothing but a bunch of lines, but I'll extend that out so you can see more what's going on. We're stuck. We're stuck between this support box and this resistance box. Let me go in here and change this a little bit lighter so we can see more of the price action behind it. So I'll make that real light. But you can see, ever since we came down into this retracement zone, it's still possible this could go breaking out and we do go test this Magic Fibo because we're at a swing point higher at the moment, right? From that high, this prior low, from this low here, we're still at a higher low. So I'm going to replace this and do a new one on this. Let me just clear this up for you. So we're still at a higher low than this low. That's why this is possible. We could see this baby go a bit higher from that high to that low. Let me do it the other way. I want to do from this current high to this low. So even though we moved it a little bit, it really hasn't changed my 618786 zone, this pink box. It is a slight lower low, but the boxes overlap each other. Basically, you can see the numbers right there. So there's not much difference in the difference between the swing point low. But hey, there is a low, there is a high, there is a higher low still holding. So if we can go breaking above this resistance zone here, then there's no question I think we're going to go test that Magic Fibo. So be careful between the pink box and the green box. So I'll extend this green box out. Anywhere between this pink support, green support and pink resistance, this could drag on for weeks longer. If we start breaking below the swing point, we're going to go down here. All right, we break this low, we're going to visit 97.30 and then 96.80 area. Highest of highest probability. If not, and we start grinding higher, if we can start closing above this 101 and change, then there's about a 2-point move toward that 102, 103 area, which is where that Magic Fibo resides. So is this going to be a low, high, higher low, higher high type scenario before we ultimately fail? Or we just going to finally go down? But even with this push lower, I expect another retracement, then a continuation. So that whole point is, before we fulfill our destination, it doesn't just mean we close below this area and it's over. It means we have probably several more years before we finally get down here. But that 618 down in that 786 retracement zone from this COVID low sets the tone, but it's still bringing us toward the what? We break the 38, we go to 50% retracement around 92. We eventually break that, we come down toward this 87, and when we break that, we still got a ways before we get down here toward that 786. So I would not be surprised on this monthly chart, we finally break the 38.2, we come 50, maybe we go back to retest it, then we come down to the 87 zone, 88, and that could even bounce to come back up here to break, and then you keep testing and on and going and continue the stair step for many more years, pushing us out. Maybe it's 26, 27, 28, we shall see. But that's why I'm thinking if we finally break below this level, that does not mean we're going to get down here very quickly. It still could take multiple years as we stair step lower. Fair enough? Well, why do we spend so much time on the dollar index? Because we know where the dollar index is headed. We have a high probability where the other markets are going, like Forex, for example. The dollar is an inverse relationship. When the dollar goes down, the euro goes up. When the dollar goes up, the euro goes down. Talking about the euro dollar. So go back to when we talked about the bottom reversal here. We said we were going to likely test the Magic Fibo. If we broke that and we could break above this level right here, this 108, that was the prior high down to the low. When we started to clear the hurdle of this 108, we kept saying weeks and even months in advance, high probability, a great trade is to go long the euro dollar and shoot for the 113, 115 target. Well, guess what? We reached them. Now we got another correction, but this looks iffy, just like the dollar breaking lower. This euro looks a little iffy to continue higher short term until we break resistance, then game on. We go up here to 116.50, 117.16. But you see where we had this little wick that broke out of that area? Remember, it's not a wick. That's important. It's the candle body. So if we can get a candle body to start closing above this 114.70 area, then we have the highest probability at that point. We close above this level right there, that 786 zone where we already tested, but we didn't hold. If we can close a candle body up there, Emil, then we got another high probability move in. We're going to 116.50. And a 70 plus, we go on to 117.16. Amen? So this could easily come back down. What if this is an A and this is a grinding B and we come down in C? Then it would be likely we're going to come back toward the Magic Fibo. All I can say is, what if, William Bruce? The dollar pops and goes make a run toward its Magic Fibo to the upside. The euro drops, inverse relationship, and goes test the Magic Fibo. This would be a great buying opportunity yet again. We talked about it buying way down here at that 102 area, that this was going to be a bottom reversal, and we gave you targets several hundred pips to this, and then when we broke that target, several hundred more pips, 600 plus more pips to get to this target. Well, sure enough, we reached it. So I don't think even with this pullback, all it means to me is, yeah, we get a nice pullback this direction, then it's a great buying opportunity to set up the next big extension, which pushes it out to 1850, and then we start looking for 25, 28. Remember the target. The target is over here. If the dollar goes down to 80, then the euro dollar is going to go on this monthly chart all the way up here, this 135, 146 area, which I'm pushing more to that 140, 145, which is still thousands of pips. It's no surprise to see that we're kind of hard breaking this Magic Fibo right here, right? That's tough. Once it breaks it, I suspect before we can get up here, we're likely going to eventually break this Magic Fibo, come back to retest it, to bounce off of it. And even after we do that, break, retest, we're still going to end up stair-stepping and ping-ponging between these levels before we can potentially get to where we're going, at 140, 145 area. All right, so this is what I'm saying. It's still maybe a few years out before we can make that move. And what is the euro expecting? Well, we've been showing this on our GMF, Gary's Market Forecast, Tuesdays. We always do that. We look at this, and yes, I do think this is 1, 2. We're going up in 3. But what is all this over the next several years? It is simply this A going up in B. And the B target is somewhere between that kind of fine-tuning 140 to 145. But from the bigger picture, it's just that 618, 786 retracement zone off of the euro dollar previous high, which I'll show you off the monthly chart. But this is likely going up here, sure. But that doesn't mean we can't get a retracement back down to the Magic Fibo to then bounce and go higher. Is this the A and this is the B and we got to do a C to then go breaking out? Maybe. Or is this little correction already over and we go breaking out further? That's why I want to see us break that resistance zone. And when you go over here to the charting platform, that resistance zone has been tough nut to crack. Just like the support zone has been a tough nut to break on the dollar index. We have been chopping in here for days to no prevail. So those of you that want to do short-term trades, we start closing above this swing point. We close above basically 114.70, 1.1470 area, and we got a candle body close above that. Then game on for us to shoot for about 100 pips, almost 200 pips from 114.70 to 116.50. And a continuation up to 117.16. So the rule is just like the rule before. When we broke that 108, we said we had extremely high probability. We're going to visit that 113.70, 114.95, basically 115. And sure enough, we reached both of those as price went up and hit those targets. Now we got the correction. Is this kind of an ugly 3-wave down and it's already over and we're ready to go breaking out? Possibly. I won't say it's not going to happen, but I do think we're going to reach these targets. Absolutely, we're going to definitely reach these targets. The question is, do we pull back here first before we get up there? Or do we finally start closing above this little box area, that 114.70 area, and then we bingo, we go to 116.50, 117. Fair enough? So while we're stuck between support and resistance, don't trade unless you're scalping 2 or 3 pips here or there. But this is a couple of hundred pips high. Just like we said, this was over 600 pips to reach this target once we broke out. Sure enough, it happened. Bingo, we went there. So we break out, we got another high probability trade. We're going to go that 200 plus pips to go ranging up into that 116.50, 117.16 area. If not, and again, William Bruce, what if we actually break down and we don't hold the support zone and we go to the Magic Fibo? Then this is the extreme high probability buy zone, because then the target's still the same, 116, 117 area. But if we come all the way back to 109, 110, then you're talking another 600 to 700 point move, right? Just like this one gave us that 600 to 700 point move, we get this pullback down into the Magic Fibo, then you get your 600 to 700 point move back up. I'm not going to say that's guaranteed to do this, but it is what it is. We close above 114.70, then you go along for 116.50, 117.60. If we start breaking down and we don't hold this little support zone, I'd love to see this pullback come back toward the Magic Fibo. And once we reach the Magic Fibo, then it's a salivate to buy to shoot for another 600, 700 point move. Fair enough? So be careful in the interim. This could look like it wants to break out and give you a head fake like that, and the next day turn around and go whipping lower. So this is why I want to see force price to prove itself. I do know if we start closing below this little support box, the green box, then the likelihood we come down to the Magic Fibo and start salivating to buy that dip is huge. But in the interim, we could ping pong between here and just sit here for longer until force price to prove itself. So set an alert. Close above 114.70, go long, shoot for 116.50, 117.60. We break down and we see us come down to the Magic Fibo, then in my humble opinion, back the truck up and shoot for another 600, 700 pip move. Just like we had a matter of weeks ago when from the previous high to low, we broke that 108 area. I kept saying it, man, we break above this level, we got a 75% chance we're going to 113.60 from 108, 600 plus pips, and likely going to go on to 114.95. That was 700 plus pips. And that happened when what? We got a candle body close above that. It went up there. So same rule. We can get that close above this swing point, which we've been testing in this resistance box. We close above it. Then we got that same 75% chance we go on to 116.50. 70 plus we go on to 117. Amen? Again, if we do get this bigger pullback, that is, bring it on. Bring on that pullback, because we do go there. Then I load up to go same targets, which again, we get down this 109, 110 area. Then you're talking back to another 300 plus 400, almost 500 pips to get to this target. But we get there, our targets would be the same up here, 600 to 700 pips. Everybody with me? How cool is that? So keep an eye on it. What's the probability right now? I think we're going to chop more, but if we do break and close above 1470, then you know what your targets are, 116.50, 117. If not, and we get that bigger pullback, which I welcome, that's, buy the dip. If we can get down here, so you can set an alert up here at 1470, we got to close above it. I'll be shooting for these two targets. If not, set an alert down here around 110. We see price retrace down to 110 area, then that's a huge buying opportunity to still shoot for the same 116.50, 117.60, which again would put us in a 700 point move if we get that pullback in the neighborhood of about 400 pips. So be careful. This could just finally give up, tired of trying to break out, and start pushing lower. We don't hold that support zone here, then it's game over to come down to the Magic Fibo. All righty. What about the pound dollar? Well, let me finish up my Elliott wave conversation. I do think this is breaking out. I think this is the bigger picture. I told you it would take many years for us to go from A to B. And along the way, we started getting this, and we thought we had a 1-2, 1-2, and this looked good. Like, ooh, this is getting ready to go breaking out. And I warned you then, if we break this 104 low, we're going to go to 102. What did we do? We went to 102. And I said it months and months and months in advance. I kept saying, now, if we can't go breaking out and we ultimately pull back and we break 104, don't go short the euro dollar expecting this thing to go plummeting much lower. It'll go down by 100 or so pips or so, which I kind of targeted the 102, which happens to be a 618. So all this is from this low to that high, a 618 retracement bounce. Now we're breaking out. We broke the prior highs over here. So this is extremely bullish long term for us to continue to that target. Nothing about this last 3+ years of price action has said anything but we're going up here. But for those trading it on a day-to-day basis, well, when's it going to go? Well, we got a big push there. That was several hundreds of pips. And we're consolidating. This might be a little ABC, and we need that push lower toward the Magic Fibo, toward that 109, 110 area. So something of this nature on this bigger time frame, a little A, a little B, and we push a little C, then we go up. But I'm looking for it on the daily chart. You're looking with the Magic Fibo, and that's where we believe we're ultimately headed. So what is this Euro A going up to be? From the all-time high down to this recent low, 0.95 low, which 3 years ago when this came into play, I said, man, it's time to go long the euro dollar. It's going to go up thousands of pips. And no, I didn't think it was going to reverse and go breaking all-time highs, but I was looking for a retracement in that A, B, C coming back down. But in the interim, we got thousands of pips still to go, and we already bounced a few thousand pips off the low, and we're looking for more. Got it? All right, so that's the big picture. And no reason to believe we're struggling here. It's the Magic Fibo. Rallied up into it, tested it multiple months, failed. Rallied up into it, tested it multiple months, failed. Tested it again, failed. So I'm not expecting this to go up into the zone, fail to make a new low. No, not yet. I'm looking for this to go breaking, retest, and eventually, a few years later, get up into the zone. Then we come back down in that A, right? On that other chart, this is the A. This is going to be the B. And then we'll come down probably into 2030s for that C. I was short for many years. I always said, those of you who've been around, or celebrating our 15th year of GPA Trading Services. How amazing how it's been 15 years already, Mr. Tucson. Wow. Man, that's how quickly that is. But our 15th year when GPA Trading Services started, we were in this zone. And I kept saying, the dips, that we were headed to parity and below. All of these years since 2010, I kept saying, we're going to parity and below. We're going to parity and below. We're going to parity and below. Hey, we're going to parity and below. And sure enough, I didn't know it'd take 15 years from the top and reversal, but Since then, we've been moving lower, and we finally bottomed. That's why when we got here, I was like, man, this is a perfect time to switch gears from my short direction to the long projection. Well, what about these big, huge moves? These are thousands of pip moves along the way. Sure. Even though we're supposed to go from 0.95 somewhere to 135, so 0.95 to 105 to 115 to 125 to 135, that's like 4,000 plus pips to get there. And maybe we'll go up to 145, that's 5,000 pips total from this low. If we push the upper boundary, that's like a 5,000 pip move total. But you get big swings in here, hundreds and hundreds of pips to thousands of pips along the way. During that correction, it might move a total of 5,000 pips, but between the dips and the buys and the dips and the buy, you're talking you can make tens of thousands of pips along the way. All right? So this is where we're expected to go, but we're struggling at the Magic Fibo. That's no surprise. I mentioned that, and this is why this is such a critical level. Once it breaks, we got some areas we got to shoot for. Well, 120. We got a 200 moving average, simple moving average. That yellow line is a simple moving average right there. Maybe we rally up to there. It's also a Fibonacci level. And it's a battle zone previously that you can see. It was former support, finally broke to resistance. We were resistance here, went temporary support, back to resistance. Resistance here, temporary support, back to resistance. So, I mean, this is what we call battle zones. Former support, turn resistance, back to resistance. So when we finally break this zone, this should be resistance. And then when we break that, convert to support, then the next level, you kind of go up the fib ladder. And this is why this takes so long. You got to break these levels, and eventually once you break them, you then likely come back to retest them along the way, and we ping pong within these Fibo ladder before we can finally get up there to the destination. That's why I said it would take years. And we're already been in at 3, and we might have 3 more. We shall see. Amen? What about the pound dollar? Ditto. Its reversal came down here from the 103. My comment about the pound way back at that same juncture was we were going to go down to at least the teens, if not close to parity. I didn't really think the pound was going to break parity just yet during the euro breaking parity. And I said the pound's likely to go down when the pound was way in the stratosphere up here at 2-point area. And we went down to 103 area. So it wasn't far off. I said, I know we'd get at least into the teens, 117, 16, 15, 13 kind of thing, if not push toward parity. And we got that. So in this overreaction, when I saw this price action do that and overkill to the downside, I was like, man, not only is a monthly oversold, weekly oversold, daily oversold, with our software, it's a given. You get a monthly hook and across, the weekly is going to cycle. You get a daily hook and across, the 4-hour cycles. You go through every time frame. Monthly hook and across, weekly cycle. Weekly hook and across, daily cycles. Daily hook and across, 4-hour cycles. 4-hour hook and across, 1-hour cycle. We call that the PAI hook and cross scenario. That strategy, along with this Fibonacci strategy and our Magic Fibo, it's game on. So we got the move. We even drew the Picasso, and this baby reversed and went exactly to where we expected. Now we're kind of touching. This is just like the euro. They're in the same cahoots. Look, pound dollar, Magic Fibo, we're testing. Euro dollar, Magic Fibo, we're testing. And that's why it's not likely just to go zipping straight through that. It struggles to break that. But once it does, I suspect once we break it, we come back to retest. You can see this many years ago. And I kind of got to move that out of the way, but it's in the way. But you can see over here, well, I'll just use this big cursor. When we finally tested it, we bounced above, we came back to retest, and then what did it do? It charged its battery to go ripping higher. So what is my scenario to repeat off of that? Move this over here. Let me get this out of the way. And we go this. Once we finally break the Magic Fibo, we retest it. That's going to set up the charge for us to get up toward that 135, 145. Well, look at the pound dollar. It's ditto. When we finally break the pound, we come up to retest it. Then we'll get the push into this 50/618 retracement, somewhere around 157 to 170. I'm kind of fine tuning 160 to 165. Amen. And then the same type of move up. And then eventually we're going to come back down. That's the plan. Everybody with me? So what is this likely going to do? Well, the monthly is going to do this. I draw the Picasso. We talked about it reversing, going from reversal to overbought. And then we'll start this slingshot phenomenon where we just keep slingshotting and slingshotting in the years to come. Go up, come back, do another slingshot, slingshot higher, come back, slingshot again, eventually till we get up here. But the plan is to see that occur more than we see another big monthly cycle down. That was the big monthly cycle down. This is the monthly cycle up. And since we made the journey, we did what? Big slingshot. Right there. Retrace, slingshot to new high. So what's in the future? Retrace, slingshot to new high, retrace, slingshot to new high, retrace, slingshot to new high. And that will take years for that to do it. Well, one thing's very interesting about our hook and cross phenomenon, that when the monthly hooked and the PAI crossed, you get slope, you get angle separation. That monthly hook and across means a weekly cycles, and a weekly takes 2 to 5 months. Well, the monthly takes 2 to 5 years to cycle. And so far, we've been in it 3, and we did cycle, and now we're slingshotting. That was the plan. I drew this years in advance, what the software was going to look like long before it ever happened, and we're expecting that to do the same. Similar during that run on the pound to get to all-time highs was this slingshot phenomenon. Sometimes you get little ones, sometimes you get smaller ones, sometimes you get medium size, and even when we were doing this push lower, we kept slingshotting lower and lower. Big one, medium size, small one. We had accumulation of all the above during that push. All right. All righty. So in closing, this is still a logical move that 1, 2, we're going 3, 4, 5, A, B, C. So all this is subdividing stair steps for us to go in a big picture, A up to B. And again, we're probably a few years still out before we get there. But the probability we get there is extremely high probability in my humble opinion. I have a God-given talent to read and interpret price. And I've been looking at charts for decades and decades, literally tens of thousands of hours. And technical analysis is king, always. And it doesn't matter, not to say that news can't affect things and Trump tariff talk can't get the markets to react, but the technical picture still plays out. Any questions on that? So keep buying the dips. Go back to the charting platform, and all we're talking about is this could go breaking out very quickly, or it could pull back toward the Magic Fibo, and if it does, then that is just salivate, add to my position for this next target, 116.50, 117.60. Otherwise, price just breaks out now. Then we're going to go to 117, 116.50, 117.60. 75% chance we go to that 116.50 area, and 70 plus we go to 117 if we close above that 149.70 area. Well, excuse me, 114.70 area. Got it? And for the pound dollar, it's basically in the same boat. One thing we haven't reached on the pound, we came just tick shy of our target. Same thing we said months ago when we got this high low. Set an alert when the pound breaks above 192.20 area. So I think I said 120, excuse me, 129, 129.50 is accumulation area. When it closes above there, go long. From 129.50 to 136, hundreds of pips, 137. And we're still reaching that first target, and we haven't reached the second target like the euro reached both of them. Pound's still underway. So clearly, any deep pullbacks on the pound should be bought, and we still haven't reached our targets officially, although we came very close. 136.27, we got a swing point high there. 135.80. It's in the neighborhood, but that was still hundreds of pips when we talked about buying it off of this pullback. We talked about buying it down here to get to the Magic Fibo. And if you'll recall, when we finally got this target, I said, look for this to go breaking out, come back and retest the Magic Fibo, then give enough oomph to get to the target. And that's exactly how that's playing out. So any dips from here should be bought and a continuation toward this target. What happens when we break these two targets? Just like the euro is 118.50 is the next stair step to 1618. Well, look at where the pound is, Mr. Tucson. It's up here at 142.60, 142.59. So I don't necessarily expect we're just going to go straight to 136, 139, or 137.97 and go straight to 142. But I think we're going to go ping-ponging within these Fibo levels. And eventually we're going to get here because remember, the pound is supposed to go where? 160, 165, which is way up here area. And so do I think we're going to reach 142.50? You betcha. I think this is a done deal. But it doesn't mean we have to go from here to 142.50 by this week, next month, or even by next year. This could take time. This could take a lot of time for that to play out. A lot of time. That's why I said when we did this bottom reversal, it would take years to get to our target. We're in it 3 years and counting, but we're up thousands of pips. That's how we do it. Amen? All right. Dollar yen. Looks like the dollar index is similar. We've been testing the support zone. We're bouncing a little bit. We're stuck between support and resistance. Look at that dollar index. So you can tell wherever the dollar index is headed, you can tell where a lot of these asset classes, like in this case Forex, and the dollar-based pairs in Forex especially, where they're likely headed. So if this goes popping up toward the Magic Fibo, for example, then we know for certain the euro is going to go down toward that 109, 110 area, as this might go rallying up toward this 102 area. Well, great. If that happens, then guess where this dollar yen's going to go? It's going to continue to bounce a little bit more and make a move up toward this 148 area. Given. But we're at a lower high trend line that we've been testing and failed to break above. It looked like we were going to break here, and the next day we closed right back below. We tested it, failed, testing it again. So this is no guarantee. What if the dollar goes breaking down and starts pushing to that next target 96.95 area, or 97.96, potentially down to 95, then this is going breaking down as well. And looking at the dollar yen trade, we talked about this weeks back. From the recent high to low, we made this rally up, and we started talking about this, and we said, yeah, if we start to get below this zone, this 146 area, from that low to that high, we started breaking below 146. That was months ago I said this, that we were going to make a move toward 136. Well, we had, of that 1,000 pip trade, we made 700 pips, and we've been bouncing in here, making lower highs. We bounced to a lower high, we bounced again to a lower high, we bounced again. So when we finally take out this support zone, guess where we're going? We take the support zone out, we got a 75% chance we're going to 138.60. 70 plus, we're going to 137. And I think this is a given because we still haven't fulfilled this target at 136, and we haven't fulfilled the target down here at 134. And that's from this move, from that low to that high. We broke the 618. And what? We were going to 136. We did 700 of those pips, and we're bouncing and chopping, consolidating, but the next move likely is down. Even if the dollar goes breaking up, best we do is go retest the Magic Fibo. So what would I do with the dollar yen trade? If we get this baby to go popping up here, I'd go back short and shoot for another 1,000 pips to get back down to 136. Amen? All right. What about the pound yen? Again, it's chopping and grinding in the zone. I warned you about some puree up in the zone, chopping, grinding, grunting. So what if our markets start to get the correction I've been looking for? They look like they're grinding to the last little leg, and then we're going to get that bigger correction coming. We get the bigger correction, I expect this pound yen to correct lower. We get Elizabeth, I'm coming to join you, honey, which is our version of the market crash that's in the horizon. Then this baby's going to go plummeting. And from the bigger picture, we can go back years ago when the pound yen was, and probably got to go to say a weekly chart, when the pound yen did this move and we had that higher low. I talked about going from the low 120 up to this prior high. So 30, 40, 50, 60, 70, 80, 90. It was in the 8,000 plus move. And off of this low, we talked about doing roughly about a 10,000 pip move. And sure enough, it did what? Bingo. Went right to that target. Now what? I think we're due for a bigger correction. It's inevitable. When the markets in 2007, when we had the financial crisis, what happened? Massive decline. Dot-com bubble burst over here. Massive decline. Everybody with me? Massive decline. Massive decline. And we got this big pullback in 17, 16 area. But that kind of tells us the last two financial crises happened. The pound yen strengthened, the yen portion of this strengthened very dramatically, and the pound yen went down significantly. And then the dot-com bubble burst, it went down significantly. So the rule and the writings on the wall, when we get our market crash, which is inevitable, the technical picture, this baby is going to go down considerably lower when it's ready. All right? So be careful. Trading it every day. Watch out for resistance up here, because I do think we're due, and I'll start zooming in on this, we're due for a bigger correction to the downside. Even if we get our markets to rally a little bit more, I'm looking for a correction and then another pop, because our markets are likely going to have a blow off top as we go into the end of the year. And then we're going to get Elizabeth, I'm coming to join you, honey, sometime late year, early next year. And then this baby's going to have another, whatever they call it. Is it the commercial real estate bubble burst? Is it a fiat currency from China, Japan, somebody like that? Their currency ends up defaulting. Something's going to cause a big decline in our markets to go crashing. And when that happens, expect this pound yen to follow suit. Amen. Even during back when we had the unwinding of the carry trade, this thing did a big, huge thousands of pip dip. So it just happens. So be careful on this. I'm not looking for this just to go continue breaking out and going up to the moon. We need a push lower again. And I do think it's going to come in a big way down to the 150, 140, or even lower. When we start to see the financial meltdown, this thing's going to go thousands of pips lower. Amen? All right. So in closing, be careful to the upside. as I was telling Randy and others that trade this frequently, be sure you're in a position of authority on that bounce, because I'm not expecting this just to continue. I'm looking for this thing to reverse. And sooner than later, we get our market correction, which should be several hundredths of point on ES. We're going to go over that in just a moment. But we're looking for a bigger correction before we get the blow off top. So during that period, I don't see this going during the market correction, continue to go higher. Then we get a blow off top and this thing goes way up. Anything's possible, but I'm looking for a correction back down, then another bounce, and then the big one. So something of this nature, correction down, going into toward the end of the year, we get some sort of bounce, and then we get the big one into next year, late year, maybe it's the late fall, and then we start to see it. Alrighty? Okay, now let's look at ES. ES is testing the extremes. I'm still looking for that bigger pullback. I don't think, and I don't want to see this thing just continue to grind. We're testing this box as of late, and this is the extension that we're looking for. I said the other day we were going to go up into 6,000-ish target, and check it out, Mr. Tucson. From the recent high to low, let me fix my lines for you, but we're testing that zone. So maybe we go just a little bit higher before we get that bigger correction. So I would be extremely careful thinking everything's bullish. We need to go long. I should have bought that dip and I didn't buy the dip. And now I'm looking to go long because this thing's going to the moon. I don't see it. I see the bigger correction. So I know there's a ton of lines on here. So let me bring this back into the current perspective. And we'll take some of this off. Apologize for all these lines, but this is what we do every day. We set these lines and we set up the bigger moves. And I'm just cleaning the chart for a little bit. And what do we have so far? Why do I think this latest little breakout, which is in still a resistance zone, and we're likely going to fail? Well, A, from the recent move on this move here to that low, we're already testing that zone, right? We kind of dipped in here, pulled back, and what happened? We closed above the 618 area, and we're likely going even on this latest move here. From that high to that low, we closed above the 618 on that candle. That told us weeks ago, well, multiple days, about a week or two ago, that we were likely going to visit 69, 6,029, maybe 6,050 area, right? So what happened? We ripped up almost, we pulled back. People were like, it's not going to get there. Sure it is. Kept grinding. So this is a danger zone for at least another revisit back toward the Magic Fibo. So be careful. This is where I'm talking about a correction. But I'm looking for a bigger correction than just the Magic Fibo area. What I'm looking for is we go back to recent price action off of the swing point low, move my cursor, from the recent all-time high down to the tariff talk low, right there. I'm looking since that bounce. So you see this tariff talk low, this recent bounce, which is this, should give us one more push lower toward this magic level, somewhere around that 5,500, 53, 5250, 5300, this big green box. So Mr. Tucson, is this, and we talked about this the last few weeks, is this a 1, 2, 3, 4, 5, and we're looking for a three-wave correction? Well, this price action in here, typically when you get a five-wave that looks impulsive, get a five-wave move, the first leg is five-wave. It's not in a three-wave correction. That looks like a three-wave. Up, down, up. That looks three-wave, not five-wave, right? This little move. So that kind of says, well, maybe this is just the A, and we're working on a B, and then we come down in C. Well, If this is the 5-way, we get a 3-way, we should at least come to this area, 55 to 52.50 area. If not, and this is an A, B, then typically, unless you have a truncated C, the C comes back into the area of wave A before then we can potentially bounce. Well, I've been saying this for weeks now, that during this corrective action, what do we see? If we see a 3-wave correction and we stop at a 618, so this is what all those lines were. From this low to the current high, I'm going to put another Fibonacci retracement from this low to the current high, which is this new high. We're looking at a 618786 retracement zone. See it? There's the 0.5. Here's my 618786. So I can extend it out. That's this bigger box here. But my fine-tuned box is more in tune with this area. So we're around that 54 and change to 53 now. It's moving since we've got a little more movement. But this area, I'm looking for a 3-wave correction. This could take us through July, maybe into August. And then from summer, we get that blow off top. If that happens, we get the 3-wave, we hold this support zone, then we have extremely high probability we're going to get a blow off top, and we're going to go pushing that probably 6,600 area. Quite the move, down from 54, 53, 52, up to 66. That's a nice move. Now, what if we don't get a 3-wave correction and this thing drags on and we get a 5-wave correction, followed by a 3-wave correction up, and it turns out for whatever the swing point high is to whatever the swing point low, that 3-wave correction after the 5 down gets you to a 618 retracement zone, then that is crash alert. We're not going to get a blow off top, and Elizabeth, I'm coming to join you, honey, comes visit much sooner. So we're still stuck in that. Last month we talked about that, right, Emil? Now this month we're still in it. We haven't got what we need yet. So I would not be a buyer of stocks, anything right now, thinking this thing is just going to blow off top straight away. I want to see the correction. And we're pushing the limit of these extensions. So that's even more of a reason to come back toward the Magic Fibo. And I'm thinking deeper. So maybe my first leg down is toward the Magic Fibo. We bounce a little bit, then we push again lower. Then it sets off the blow off top. And this is pushing us out to when? Summer. We're not officially summer yet, I don't think. June, maybe we're almost official summer. But we're talking July, August area, that this 3-wave correction or 5-wave correction, either way, could take several weeks to even a few months. But once we get from late summer into fall, pushing toward the end of the year, if it's a 3-wave correction, I'm looking for that blow off top. What are we saying? Watch yourself. I think we're going to get the correction. All we need is Trump to talk about a tariff talk. It could be anything. I don't know the reason behind it. The technical picture says it's due to happen. And what else do we have? We have this bigger picture too. We got from this high to this low, and now we got a retracement to a lower high, and that still sets up the potential, the potential of a lower low. So Elizabeth, I'm coming to join you, honey, is in the cards. Whether we 3-wave correct and get a blow off top, it's coming, or this ends up being a lower high and we don't hold these levels and we go crashing sooner, it still means my original statement. Everybody else predicts. You always hear my prediction, my prediction, my prediction. I predict this, I predict that. Well, I leave that to the prophets I'm not a prophet, but I can certainly anticipate price on a chart with the best of them. And when it comes down to it, I made a statement, not a prediction, that before we break 7,000, we're going to break 4,000. I still think that's going to play out. Even if we get the correction and the blow off top, we're still going to not break 7. We're going to break 4 before that. That's the Elizabeth, I'm coming to join you, honey. Pay me now, pay me later. It's coming. Technical picture is screaming. How do we know? Just look at this growth and bubble pattern. Look at this thing. Since our dot-com bubble burst and then the 2007 financial crisis, look at that growth. It's been exponential, linear, and minus a couple of areas with COVID, we really haven't had those big retracements. We're overdue. I warned you along the way when 2013, when 2023 hit, we were due for a big correction. And then we said, COVID, even COVID was on the technical picture. We didn't know it was going to be because of a virus, but we knew it was due for a correction. And this is still part of that unbelievable bubble pattern. We call that a psychology of a market cycle. It's due to come back. So we're talking, Elizabeth, I'm coming to join you. What are we looking at? We're going to come at least to the Magic Fibo, which is around this 35, 3,300 right there. That's minimum the correction. I'm thinking more like we're going to come down toward that prior gap where we had this dot-com bubble burst, we had the 2007, and then we went breaking off exponential from there. Minus COVID, we really haven't had just major pullbacks. It's just been grinding higher, small little pullbacks along the way. We haven't had a deep 618 style retracement off of that. Amen? So look at this. Randy, check this out. From this low up to our current high, look where my 618 level is. 27, down about 18. That fits my pink box where I think, Elizabeth, I'm coming to join you, honey. We're coming to visit. So Ian, I'm not thinking, Elizabeth, I'm coming to join you. We're going to go breaking new lows. No. But since this bubble pattern bottom reversal back in 2009, yeah, we got some minor retracements along the way, but this big run up, you take the swing point low up to the swing point high, and we're looking for a 618 to 786 retracement. And guess what? Both of these are below 4,000. Even a 50% retracement is below 4,000. That's where my Magic Fibo is currently sitting, right around that zone. And then we go a little bit deeper, 27, maybe down to 18. That kind of gets near the top area here. Excuse me. So the psychology of a market cycle means when it pops, you typically come down to the base in which you started this process. So this is what we're talking about. So when you hear me term, Elizabeth, I'm coming to join you, honey, that's this. Massive move lower. And looking at that, that could be upwards of about a 70% decline. If we can get up to where we think we're headed, we're on that 6,600, and we have about a 70% decline, would put us down around that 18 level, pushing the envelope area. So you're talking substantial 50+% decline, probably pushing it more toward the 60 to 70% decline once it happens. Substantial. Amen? Everybody see it? So Ian, put it in perspective. All we're looking for is from that low up to whatever the high is. Is this little retracement going to hold and do a blow off top and we go up to 6,600? That's where this little blue range box comes from. It's up near that 6,600 target right there. You see the top of it? And that's looking for that reversal to happen somewhere around that 6,600. So that's even with the good news. We get a three-wave correction. We get the blow off top. We push towards 6,600. Then, Elizabeth, I'm coming to join you, honey, comes into play. We're looking at least from the low to that high. So you'd move that as far as the Fibo level up a little bit, and it would change these targets just slightly, but you're still looking for at least a 50, and I'm thinking more 60 to 70% decline. Ouch. Significant. So, what has that got to do with us right now? We might grind a little bit further. Maybe we grind a little bit more for those of you trading. I know in E-minis, you die and go to heaven with a point or two. Well, we're in the danger zone. We're reaching the 6029, that's the 1448. When we had the low to the high, we closed above that 618. That said, we have a 75% chance we're going to 6,000 change, maybe 6,050, and we already reached it. Could we go a little bit higher? Sure. What happens if we keep going? That's worse. If we keep going, that reminds me of our 3-day on the SPX. Go back to the financial crisis and give me a moment while I get back there. But that goes back to the financial crisis over here. So I'm going to move this up that way, and I'll start to stretch it for you and then zoom in. Back in that same time zone, we have eerily the same type of retracement. This price action, so again, let me stretch it out more and zoom it in some more. This looks like what we're going through right now, eerily the same. This little zone where you got some consolidation, last pop, a drop down to the 3-day, then a vertical correction that did a V-shaped recovery, and we didn't get any major pullbacks along the way. We just kind of, a couple of days, but we just kind of did it, and we just kept going. We went on to make all-time new highs by about 20 points. And then what happened? Elizabeth, I'm coming to join you, honey, of 2007 happened, and we had a substantial correction. And it went down 57%. That is ugly. That's in tune what I'm looking for, what concerns me. This is what's happening on a 3-day chart. See it? 3-day. We got the same type of move. We kind of grinded, popped to a new high, and then we corrected down to bounce off the Magic Fibo, and then we went to go grinding straight up to an all-time new high. See it? Well, let's go to a weekly chart and go to current price action. That's exactly what we're seeing now under current price action. And we get this to current price action where we are. This looks exactly like that 2007 on a 3-day chart. This is a weekly now. We kind of chopped sideways, bounced, went on to an all-time new high. Then we went ripping down, and this time not to a 3-day Magic Fibo, but to the weekly. That's a higher time frame. That means there's even more ugliness on a higher degree that can turn out if we ignore this correction and we just keep grinding to new highs and we go to all-time highs. Maybe we push toward the 62 up here, maybe the 6280 area. So if we just keep grinding without my correction, that's not good. Then it goes on to an all-time new high, and then what happened? Elizabeth, I'm coming to join you, honey, happened sooner, and we get a truncated move. I do not see us just keep grinding higher and higher and higher and higher and higher without a pullback going to my 6,400 to 6,600. Everybody with me? If we keep grinding to all-time new highs, then it sets up that 2007 scenario where we had this exact same thing, an uptrend, we got a little corrective pullback, one last pop, went down to the 3-day, had a V-shaped recovery, and then you saw what happened. So believe me, you don't want this to continue to grind a few hundred more points. You want to see this thing give us a retracement of several hundreds of points. Then we get a pop into a blow off top, pushing us into that 64 to 6600. And if we see a nice three-wave correction into my support zone here, and then we get that blow off top, I'm pushing more toward 64 to 66, pushing more toward that 66 level. Where if we just keep grinding, I think at best we'll get to maybe 61, 62-ish area. And then we get, Elizabeth, I'm coming to join you, honey. So if this continues where we just keep ignoring a pullback and we just keep grinding higher, not good. That sets up danger much faster. Amen? So, in my humble opinion, go back to current price action, watch out. This grinding, grunting, we're already within the target zone. You can see 6,000 range. On this lower scale, we're already reaching the target. On the higher scale, it's just a little bit more, gives us a few more points, but look out. This still looks like a high, a low, and a lower high. So we get a three-wave correction, great. We get a blow off top. If not, and we just keep grinding to an all-time new high without any retracement, then Elizabeth, I'm coming to join you, honey, sooner. But either route says we're going what? Before we break 7, we're going to break 4. Okay? So fine-tuning that, just to reiterate, three-wave correction gives blow off top, 5-wave correction followed by a 3-wave correction up, and from the high to the low, it's a 618 retracement. That spells crash, crash, flash. It's flash and crash, and we won't see a blow off top. We'll see this thing start sooner. So pay attention. I repeat, I would not be buying and loading up long at this juncture. This was where we should have bought down here. We talked about it, and coming back for a steep retracement, I expected for us to go back into the zone. Well, all this is potentially a little more lagniappe, but it's still flashing, look out. Even the NASDAQ, the mighty NASDAQ, is doing what? Since last December, we're at lower highs, right? We topped out, we got lower highs, the big tariff talk, then this retracement. We're still testing that lower high trending line, and we haven't broken out. So this too is screaming we need a three-wave correction. And we're not just talking a few hundred points. We're talking maybe we come down, we retest, and we push. I'm talking somewhere around that 18,500 zone, maybe 19,000. So I want to see a substantial thousands of pip correction before we go breaking out. If we get the three-wave correction, the blow off top for the NASDAQ pushes us up between that 23 to 26. But if we get the three-wave correction into this zone, setting us up for the extensions, I'm pushing more toward 24 to 26 and fine-tuning somewhere around 25, 26. Amen? So what are you saying? If the NASDAQ gives us that three-wave correction, and then we get the blow off top into the end of the year, I'm looking more toward 24 to 26, fine-tune 25 to 26. If not, and we just keep grinding to all-time highs, maybe we get towards 23, and then we get, Elizabeth, I'm coming to join you. Otherwise, I want to see this correction, and we get the blow off top. Lastly, if we get this correction, and it ends up being 5 waves, 1, 2, 3, 4, 5, followed by a 3-wave correction, that again, from whatever the high is when the big correction comes to the low when it stopped, and we get a 3-wave back up, happens to be a 618 retracement, then that's flashing crash, 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 and the blow off top is off the table, and here comes the big one sooner. But if I had to guess, I think we're due for the 3-wave correction in through summer or into late summer, probably July-ish, maybe August. And then we go September, October, November, pushing us into late fall, that blow off top. So this is what I think will transpire. You get a three wave in here, then we get a blow off top, followed by late into the year, early next year, boom. Here comes Elizabeth. I'm coming to join you, honey. If not, and we continue to grind to all-time highs, then expect the big ones coming sooner. And last but not least, we turn this into a five-wave correction followed by that three-wave up, flash crash. Elizabeth, I'm coming to join you, honey, probably before the end of the year. We shall see how that plays out. So in closing, I would not be a big buyer of tech right now, thinking it's going blowing off and it's going to the moon. But AI, and drone technology and everything else, flying taxis, everything that's coming, we're going to go blowing off top. No, we need the big one, technically speaking. And if you look at that bigger picture we showed you on the ES, same type of thing. You go way back to the big correction back in here. And since that 2009 low, we got that bubble pattern, psychology of a market cycle, continuing to go ripping. And what typically happens? You get a correction back toward the plateau. Well, this one's different. During 2000 dot-com bubble burst, we were up here. And then during the financial crisis, we only made it to this level, where the ES made a double top up here, then went to a lower low. NASDAQ did not make a new double top or a higher high. It made a lower high and then a higher low. So it's not always exact, but needless to say, both of those, when Elizabeth, I'm coming to join you, honey, we're talking substantial over 50% decline. So if we're in the 20,000s and we crash, we should go somewhere into the zone. The Magic Fibo is to start right around 20,000. And then if that doesn't hold, we're talking probably coming down to this 15 to 12,000 range. Ugly, ugly, ugly. So I'm not all doom and gloom. Even during market crashes, you can make a lot of money playing the markets both directions. And even during the bigger crash periods, people think that this was, two separate events. At the time when I was trading this, I thought, well, yeah, that's a dot-com bubble burst. And this was the real estate bubble burst. And that's the reason for two separate. All this is, Emil, from a bigger picture, this is a three-wave correction. This down was an A. This rally was a B. This new low was a C for the end of that dot-com bubble burst. And then we got the big rally up. Well, since this big, huge rally bubble burst ending this, and we went to this parabolic move higher, we haven't got a 618 retracement. So what are we talking about for this guy? Same type of thing. ES, we showed you somewhere around 27 to 1800, somewhere in that zone is where I think that will eventually come down to before we bottom and reverse. Well, what does the NASDAQ have? Well, same type of thing. We got a different swing point low, so we'll run them from both, but from this recent low, to use same lows, up to the current highs, we're talking somewhere below 10,000. So more than half. We're in the 21, 22,000 range. Could go up to 24, 25. So even if we raise that a little bit and go up to the high and push that, right? Push it a little bit, may still right around 10,000 from 25,000, more than 50% decline. Amen? So we're talking substantial correction that is due. And from the low to the high, we're talking somewhere around this 10,000 down to 6,000 correction is due to come. Amen? Any question? So more than a 50%, we're talking pushing more 60 to 70% decline. But more than 50 is where Elizabeth, I'm coming to join you, honey, comes to visit. So from the bigger picture, Emil, all we're looking for from that low, from the low down here from the dot-com bubble burst, and then we rallied up into, so either one, I take that or I move this here, it's still in the same zone, 10,000 to 6,000, 10,000 to 6,000, so it's still in the same zone. So minimum, Elizabeth, I'm coming to join you, honey, is a visit of the monthly Magic Fibo. Amen? That goes for all markets. Minimum. And likely might even go below that. So if we start pushing more toward a 786, then obviously we're breaking the Magic Fibo on the monthly chart. So see it, NASDAQ, ES, same scenario. We're talking substantial retracement. But that, Elizabeth, I'm coming to join you, honey, we'll end up with a higher low before we can go breaking all-time highs. But look at this one. Between dot-com bubble burst and the 2007 financial crisis, we didn't go breaking all-time highs again until about 13 years later. Topped out in 2000, retopped in 2007, to then finally go breaking on all-time highs 13 years later, from 2000 to around 2013. What are we talking about with this, Elizabeth? I'm coming to join you. It could be the same type of thing. It could be a decade or longer before we go breaking all-time highs again. But don't fret. During the corrections, you can make money, and even during these corrective action type moves, you still have several years of bounces and corrections of the bigger move. So this is why I'm thinking it's not all going to be straight down for, 10 years. We're just going to keep going lower and lower every day, week after week, month after month, year after year. We just keep going lower till we get into the zone. No, we're going to have years upside, years downside, but it's going to stair step its way. And we're looking for what? Ultimately, after it's all said and done, we're looking for a big three-wave move that's going to get us down into this zone. Before then, we start working our way to get us out of there. And who knows, maybe it's in the 30s or 40s by the time we go breaking all-time highs again. We shall see. Maybe it's the 30s. Maybe we go popping and we get the three-wave correction a little bit faster, and then we go popping to make new highs somewhere in the 30s. But we're talking years before we see all-time highs again, like we did over here. Got it? All right. And what about the Russell? Russell thinks it's breaking out. Emil, it thinks it's really going to go breaking out. Russell, do you really think you're going to go breaking out? We're just kind of catching back up with the other market. The other market's already reached from the high to the recent low. They're already breaking above their 618-786 zone, going toward extensions. Well, this one is barely starting to move toward the 618 area. So be careful with this. I suspect, again, could this go popping out and potentially make all-time highs? I don't see it. I see we're going to end up with a lower high. So this is the monthly chart. That's why I'm looking at it differently. All-time highs, I don't see it. I see a lower high, lower low, breaking below the 16,000, targeting 14,000 to 12,000 zone down here before we go breaking all-time highs. But be very careful that I suspect we're going to get a smaller correction, then one more little push into this resistance zone, and then we get the big one. So where everybody gets a blow off top, I see the Russell getting a lower high to then crashing. So just like I said on ES, before we go busting out all-time highs, I think we're going to get a break below the 16,000, 1600 level on RTY. And for IWM, the way most people trade this, we're getting into the danger zone, looking for a pullback, then potentially one last thrust. But either way, be extremely careful. We're at lower highs, and I suspect we're going to get another lower high and a lower low. So before we go blasting off into all-time highs, we're going to break down below the 160 area, 165, 162 area, and make a new low. And my target is around 140 to 120. So I'm looking to do a credit, a debit spread whereby put spread. And if we get into the zone, I'm looking for the correction to come soon. Then we get one more pop where everybody does a blow off top. This baby blows off into this big resistance zone. Then going into as far as I can go out, I'm going to be pushing for this 160 break and a push toward that 120, 140 level down into the zone. So from way up here in the 200 plus down to 140, 120 area, I'm going to do a put spread and look for this to go as far out as I can go. Short term, I think this rally is going to fizzle and we're going to get a correction down into the support zone. So let me zoom in on a daily and be careful. This thing looks like it's ready to go breaking out, but it's just like the other markets. I think maybe we can test this. We get the correction, then we get the blow off top. We push the parameter. So I've been saying when I get an alert at 225 and above on IWM, I'm looking to buy that put spread to the downside, shooting for below 160. And my target is 140 to 120 as we get up to 225 and higher. Long-term push lower where I'll push it out as far as I can go. So depending on when that happens, again, I'd be careful to think this thing is just going breaking out. It's doing it. Should get a correction. Then we get one push off, blow off top, and that blow off top would probably not even go into all-time highs. And then we go boom down to 120, 140 area. Amen? So be careful with all of these. It looks like it's nothing but we're going. That's when everybody thinks it's going up. That's when the big hedge funds and the rest of them start loading up on puts and we get the correction. So I don't want to see these things just continue to go. I want to see that three-wave correction first, followed by the blow off top going into late summer, into fall, maybe early next year. Then we get the big one. If this baby just keeps grinding like the rest and they go to all-time highs, then that sets up big ones coming sooner. Amen? Looking at global liquidity, well, let's do the Dow. Those Dow traders, we're still at lower highs, just like the other markets. And I suspect we're going to get a correction before we get a blow off top. I don't want to see the Dow continue to grind and get up to the 46, 47, maybe 50,000 range blow off top. I want to see that correction back down into this 39,000, 38,000 range. Three-wave correction followed by a blow off top in the late summer into fall, going into the year, from late summer to fall, maybe into the year, early next year. Then we get the big one. I don't want to see this continue to grind higher without the pullback because the same rule, go out to your monthly chart, go to the same route, and we come back down and condense this back to the market crash and look at this parabolic move. We had similar type of move, although the Dow, after the dot-com bubble burst, it went on to make a new all-time high. Then the financial crisis hit, so each chart's a little bit different, but the same. We got new lows. This was the same A, B, expanded flat correction down in C, and since that 2009 reversal, it's been parabolic. absolute parabolic move. So you do the same type of move, right? And we take from the low to the high, and let's just say we do push that 50,000, the green target up here somewhere, 46, 47, 50. And then from that low to that high, what are we talking about? Look at that. 14.5. Ouch. Potentially going down to 10,000. There's no way the Dow can go from 14,000 down to that zone. Oh, yeah? Sure, it can. And even if you take it off a logarithmic scenario, we're talking from 40,000 down to about 22,000. So this is more in tune at 22,000, maybe down to 15. That fits the tone more with the parabolic breakout. You get a 618786 retracement. So Dow coming down somewhere between 22,000, 23,000, and say 16,000 near the plateau where we topped and started this move. Amen. Be careful. And we got the COVID correction. Even that, from that low to that high, that's not a 618 retracement off of that. So we haven't had one. When you look at the move from this low even to that high, that wasn't a 618. And you continue out, we haven't had one. So Mr. Tucson, what does Elizabeth, I'm coming to join you, honey, mean on all these charts? Take the 2009 lows after the last financial crisis, and whatever the high, when the big one starts, Elizabeth, I'm coming to join you, honey, we're looking at a 618 type retracement. So minimum, we're looking for a monthly Magic Fibo, and in this case, it's roughly a 50% retracement toward the Magic Fibo here, but in all of them. AES, I'm looking for at least the Magic Fibo, which is around that 33 to 3,500, and then to the NASDAQ, at least the Magic Fibo, and could extend below it, certainly. Remember, and look at the NASDAQ, we're talking at least a Magic Fibo, which ties in with this 618. And then ES, at least the Magic Fibo, which is around that 33 to 3,500 range. So that's a big correction. That's what we're talking about. That's the extent of what Elizabeth, I'm coming to join you, honey, is screaming. So do we get the correction followed by a blow off top? We're coming here. We don't. We just make an all-time new high, and we don't officially get the blow off top, but we do make all-time highs without a correction. It's coming here. Or we do get it and we get a blow off top. It's coming here. Mark my words. We're going to visit the Magic Fibo on the monthly charts for all of these markets, monthly chart. Pay me now, pay me later. In the current time frame, we get a three-wave correction, blow off top into late year, early next year. Then I think we'll start that in 2026. And remember the chart I showed you from 1875, where they picked the market cycles of the dot-com bubble burst, the financial crisis. They estimated through his scale that in 2026 we're going to get another big one, like we did in 2007, like we did in 2000, and that was written in stone since 1875. I'll see if I can pull that chart back up for you. You know what I'm talking about. And in 2026 starts to say that's when the correction happens. That fits my technical analysis, kind of spot on. So is it late 2025 into 26? Then we start this big correction. Where's the correction going down? I'm not going to say it's going to go down all the way down to this Magic Fibo in a straight shot. No, you're expecting to see some down moves, some major up moves, but stair step along the way. And what we're looking for after the big crash comes into play, you get a 618 retracement, a continuation, And that's how you get down here. It will take years to make that correction. Amen? All righty. Looking at the Nikkei, which is our global liquidity. Be careful with this one as well. We're at lower highs. We're testing that big battle zone. We tested it and we dropped after the tariff talk, etc. We dripped and now we're back into still a lower high. Look, we got lower trending highs here. No doubt about it. So this is danger zone for us to do what? Just like our market. Get a three-wave correction to come down, probably toward the 34,000, maybe 32,000, upper 32,000, to then get a blow off top into late summer, no, start to bottom around late summer or so into fall. And then we get the blow off top maybe by year end, early next year. And then you get the Elizabeth, I'm coming to join you, honey. So those of you looking at the Nikkei, what are we talking a decline from? If we get the blow off top somewhere in this 45 to 50,000 range up here, maybe we can extend it into the 50s. But from that, we're looking at what? Go back to the same time frame, which I don't have it on this. Let me see the Nikkei. Nope, we don't have it on either one. I can't go back that far, unfortunately. But even if we take it off of the low we do have, yeah, we do have it right there. Okay. I was just looking at the scale down here, but there it is. So, Emil, what are we talking about? You bring this into perspective. We got the swing point low from that 2009 bottom, and then you go up to this blow off top somewhere in this, say, 50,000 range. We're looking at the Nikkei to go down to 24,000, 16,000 range. Ouch. Minimum, the monthly Magic Fibo. And ultimately a big three-wave correction. And looking for a 618, 786 type of retracement. Amen? So whether you trade this or not, I look at the Nikkei as global liquidity. And when it pushes lower, it's going to pull our markets lower. So be careful where we currently are. I would not be buying the Nikkei, expecting this to go ripping higher right now. It did bounce and it's kind of struggling, lower highs. This is kind of screaming, we need a correction. So I'd love to see a little three-wave correction going into summer. So on this scale, I guess I gotta stretch this out and fix that for you. Stretch this out this way so I can get more of the summertime information in here. Here we go. So we're looking for something like this, Emil. We come down, we get a three-wave correction into the support zone. In that support zone, since we got the low to the high, let me, before I do that, let me move this up somewhere around that 50% retracement down to potentially a 786 zone. So we want to see a three-wave correction, probably pushing us into July, August, something like that. And then we do blow off top. As we start breaking above this 40,000, then the technical picture is screaming for those extensions to go up to 44, 45, 50, right? So what are we looking for? Three-wave correction into summer, blow off top going into late year, maybe early next year. And then the prediction from 1875 is in 2026. We're going to get a big downturn, financial crisis like they, in this case, predicted. I anticipate. Do everything but predict, but just in 2000, dot-com bubble burst, they talked about it in 2007. And the next one is 2026. So that kind of fits the tune. Correction, blow off top. Elizabeth, I'm coming to join you, honey. And remember what the big one is. I would take all of these markets, go from your 2009 low, run to the whatever the high is when the correction starts, and look for a 618-786 retracement. Then when we start getting into that 618-786 retracement zone, then you can start looking at opportunities probably in the 30s. That would be another buying opportunity for us to then look for the markets to recover. Amen. And along the way, you'll get like 618 type retracements. So you can lose thousands of points, get thousands of point bounce, and still fulfill that target zone. They're a little overstretched here, but you see my 618786 from the low to whatever the high is, boom, look out. And that'll certainly probably take us into the 2030s before we start bottoming in reverse like we did in 2009. Amen? All right, let's continue. What about black gold Texas tea? Dan, I told you we close above 64, go long. We're going to test the Magic Fibo on the daily chart. So let me get to the daily chart, expand the view. Highest of highest probability. What did I say? I said wait for a breakout. Let me update this on my latest one. And there we go. So wait for breakout. And last class on Thursday, we talked about this in great detail. Stuck between support and resistance, wait for the breakout. But if we break 64, we're going to the Magic Fibo on the daily chart. And what is happening? Ian, can't make this stuff up, can you? How about that, Emil? What a call. What a move. What a high probability outcome. We close above 64. We're going to what? 67 area? 66, 67? Well, basically the low of that's right around 66.80. Upper part of that line is 67.62. So expect this to continue to grind higher and then take profits when you get up here because it could be rejected. Or if it continues and we hold and close above the Magic Fibo, I'd like to see a break above a retest. Then the next zone is up here in that 74 to 72 range of resistance. So let's scoot this back a little bit. And if we can start closing above from the recent high to the low, we start closing above this zone. So first things first, we're going to get up here. We take profits. Arrow likely might even get a little bit of a pullback. But if we can break this and retest it, then that's another high probability. We go into this 72 to 75 range. We break that, it's game over, because what happens when you break from the high to the low? You break to 618786. We're going to 84.87. And from there, we're likely going to push that 100, 105 level. And what is all that? It is the complete opposite, in the opposite direction of what we think the markets are going to do. Well, from this high to low, we're due for a 618786 retracement. Amen? So oil prices from that high down to this 60, what was it, 55 low. If we go breaking out and we reach the Magic Fibo and we don't get pushed to a new low, we break out, then we go to the 72 to 75 range. We take that out, then it's 84.87, and that's a continuation of our 618 retracement around 100. Amen? So I kind of kept saying that force price to prove itself, force it to break out, but once it does, you have extremely high probability. And Emil, we got to close above right there last week. And this week's candle was going where? Oh, good chance we could go visit the Magic Fibo on the weekly chart, but my first target is the daily chart. Got it? So a few days back, we closed. That said, yep, we're going up. highest of highest of highest of highest. Did I mention highest of highest probability? We're going there. And why do I want to take profits when I get there? The software. Software is telling me on oil, the breakout is there. And when it gets to where the target's going, highest probability, we're got the weekly going, so that reinforces we're going higher. But why do we want to start taking profits as we get to the Magic Fibo? The daily's getting to extremes. So that's just be in a position of authority. Doesn't mean we can't continue this to 100. Sure, we might just continue to keep stair stepping in the months to come and we break out. But we could also get this in a 3-wave correction. We hit that, we get one more 5-wave decline, and we break a new low. Then we start the process all over. So when we get up here, Dan, take profits. And then let's see, do we break it, retest? It could go up to 72, 75, and we break that, then it's over. We're going to 100, in my humble opinion. And no, I wouldn't just say as soon as I break that, I'm going to 100. But going back to the charting platform, we start breaking this, then the tone is set. We have a 75% chance. We're going to 84. 70 plus, we go into 87. And by doing that, my humble opinion, yeah, we could stair step in here and continue to stair step, but we're going to 100. All right, so we start closing above 75 from the low to the high. That sets the tone for 84, 87. And it doesn't mean once we hit 84, 87, we go straight to 100. We'll probably get corrections and ping pong between these Fibo levels, but it does say in the longer term, we're definitely going to likely go visit that 100 once we go to 87 and not go up here to 87, come down to a new low. It says we're going to continue to make higher lows, higher highs en route to that 100. But first things first, we got what we needed. Boom. We're going where? Magic Fibo. We'll see how that plays out. Any questions? Again, take your profits because, yes, this is possible that we could get rejected, make a new low. And all I can say is, Emil, we go up to the Magic Fibo and we get rejected. What do? Back the truck up. If we get down to the low 50s or 50 or lower, because then you're talking a double if we're at 50 and lower, because we're still going to go test that 100 target. Amen? Any question? And that's kind of what we talked about for oil for months and months. And we had all of this. I was expecting us to break into the 100 zone much sooner during this period, but it just kept chopping sideways, overlapping. And that's just typical price action. And what did I warn you about black gold when we kept seeing this overlapping, chopping, grinding, grunting? I said, we're due and we have to break this May 23 low over here in order for this to clean up all of this gobbledygook overlapping price action before we could then go breaking out. We did it, and now we got first move is up to the Magic Fibo, and I think it's a done deal. Technical picture says we're not done. We're going to keep grinding and grunting toward this level. Either A, we're going to reach this, consolidate and pop, or B, we're going to get a retracement before we pop, or C, we're going to get a new swing point low. And all I can say is on any dip is a good opportunity to load the boat for that bigger move that's still to come. Otherwise, we did end up with this slight higher low. Looks like a double bottom, but it's a slight higher low by a few cents, as you can see. And this is still bullish. I warned you that this was still bullish because even during the correction, we held the 618 retracement zone that it would pop, likely going up. Now, when it gets there, take profits because A, it could retrace, or B, we can still get a retracement before a dip. but I'd love to see it get rejected all the way back down and make a new low one more time to set the tone for a double. I like that. We may not get it, but if we do, you know how to react. And in the short term, expect this to grind another couple of dollars probably before we stop and then get some sort of correction. If we break it, and again, if this just keeps going and we close above this resistance zone, game over. You got a good $10 move coming after that. So we start closing above that 70 plus 74 range. I want to see that swing point, basically 73, break above this trend line, which we're testing, and we get into this zone and we take out that swing point, then it's basically a $10 move, 75% chance we're going there, 70 plus plus, we're going to 87. And all we need to do is close above that swing point, which is smack dab in the middle of my 618786 retracement. Amen. So take profits. If we get a big pullback, load the boat. If it just keeps going and we close above that, then that's another great long for $10 plus move. And by the time we get up here, the likelihood we go breaking a new low is about 0% chance on a 1,000% scale. And the likelihood we make a higher low, higher high, and continue this journey toward that 90 to 105 zone, pushing more 100 zone, is extremely high probability. Amen? All right. Gold, still say be careful, 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 careful. I don't think gold is done. I think this is just kind of this small little retracement, and then we push lower and we keep stair stepping down. But the bigger picture is a visit of our Magic Fibo. Amen. And I'm kind of looking for a 5 waver down. Then this would be a great buying opportunity for gold to then start ripping toward 5,000. And I don't mean this has to happen in days or even weeks, could take months. By the time we come down and finish this correction, then by the time this correction is over and we go up toward 5,000, could still take years. So we're not trying to tell you, hey man, as soon as gold gets down to 29, 2,800, 2,700 zone, it gets down in this zone, 2,800, then buy it. Next thing you know, it's going to be at 5,000 in a few weeks, a few months. No, it probably take years, but that's where we're headed. So when do I expect gold to go ripping again? When we get that multi-year decline and everybody's doing a 618786 retracement on the Dow, the Nasdaq, the Russell, S&P, etc., then I expect gold is going to go ripping during that period. Got it? So be extremely careful. We peg this. We talked about it going down to 3150, bouncing to 3350, and it did that exactly. And what it ended up doing it in, that bounce went in a beautiful 3-wave move. So this is why we're looking for a 5-wave down to finish this bigger correction to set the tone for the next big run. So in the short term, any rallies should be looked to be sold, because I don't think gold is ready to go breaking out. Anything's possible, but the technical picture says this correction was not enough. We need to come down and visit the Magic Fibo. And what did I warn you when we were pushing that 3,500 up there? All-time highs, woohoo! Look out, we're coming back to the Magic Fibo. And that was several $100s, 3,500 down to 31, over $400 move down, but I don't think that's over. Do not think that's over. This looks like it's turning into a 3, 3, 5 type of correction and a bigger A, B, C type of correction. Got it? Whether you like Elliott wave or not, it is what it is. And also, looking at the software, we always look at the software, and the software is kind of telling us the same thing. Be careful. Daily starting to turn over. Weekly's already turning over, and the monthly is overbought. So this is part of that correction. What do I expect this monthly to do? I don't expect the monthly to go cycling down. which would take 2 to 5 years to cycle down? No. I'm looking for this baby to do what it's been doing as of late, cycle up, start slingshotting and slingshotting and slingshotting. So I'm looking for yet another slingshot, Mr. Tucson, but I want to see this baby come down into that 29, 28, maybe 2700 zone. Maybe retest this little rip correction, breakout, come back and retest the breakout zone. So somewhere between that 29 and 28, 29, 2700 zone, which is what? My daily magic Fibo. See it? Right in this zone. So be careful that I do think this is going to let the weekly continue to push lower. My monthly is already beginning to hook and cross. So what do we know, Ian and others? When you get a MPA PE5 version 5.0, you get a PAI hook, you get a trend momentum cross. We start to see slope and angle and separation down on a monthly. What does that mean? That means this weekly is highest of highest probability going to end up cycling down, cycling down. So as we get this 5-wave correction to come play out, I expect that to take weeks and weeks. So a weekly takes about 2 to 5 months to start topping. And we already started this process and we've been in it a week or so. So could it take a few more weeks? You betcha. Amen. So I'm not looking for this thing to go plummeting down to 29, 28 range is kind of my sweet spot, but I'm looking for this over the next few weeks, to say the least, continue that correction and this weekly cycle down, and then what? What you can do with this software already, which is interesting, you can go up in here, and I don't even have one on here. So let me put a new template on here and do the one with my instant order. And we can go in from a monthly, make sure we're on the monthly, and we go in from the monthly. We're expecting this hook and the cross to develop into what? A weekly cycle down. Everybody with me so far? Weekly cycle down. So I can go into this automatic trade management system, Harold, and go under expert advisor, properties, and we can go in here. You can set your pip stop loss. You come down in here and you come to what do you want to buy? And any fractals are good. So looking at entry criteria, I want to go what? Buy a trigger long. Use trade trigger long. True. Trade trigger short. False. Use a slingshot long. False. I don't want anything but a trigger long. Slingshot short. False. So all I want to do is buy a trade trigger long. Any trigger is good. Position trigger, scalper trigger, optimized trigger, absolutely. Anyone is good. And you go in and set your stop loss, take profit levels, and then you can set it in advance. So all we want to do is buy a trigger long, and the only time you're going to get a trigger long is when the trend momentum and PI get oversold, you get a trigger. And when they get overbought, in overbought territory, you get a trigger short, etc. So we have this trigger short that we're working on, lower, yes. And when this cycle finishes, I could go in here and say, click ready to trade. And this baby will sit in ready to trade mode for weeks and weeks and weeks. This thing cannot enter until the criteria is met, and that is to give us a trigger to the upside. And that occurs when what happens? When your PAI and trend momentum get oversold, you get your triggers up. So I'm looking for this to buy this dip in the weeks to come, and I can set it right now, even though it might not trigger for a month. 2 months. It'll continue to wait until this gets oversold. And when it does, and the trend momentum gets oversold, and a trigger is manufactured, then it'll take the long trade. And we're looking for a massive breakout to the upside. Weekly cycle down, then the weekly is going to cycle up. Weekly cycle down, the weekly is going to cycle up, and price is going to go where? Toward that 2800. And then we're going to look to buy. And I can just stay in ready to trade mode. How cool is that? So, in closing, I do think, let's see if I got another one here. I do think we're going much higher in the months to come. But first things first, we got to get that correction. And I'll go back over here to the charting platform. This is what we're thinking, right, Mr. Tucson? We're going to go down to what? The daily Magic Fibo. So you need to have this on your chart. It's critical. And this is where we're headed. And currently it's right around 29 area. And I suspect we're likely even going to push it a little bit more and push toward my sweet spot of 28. But my zone is somewhere between 29 and 27. And that is the bigger picture, low to high. That's a 618 level down to a 786. You notice how we rinse and repeat on that? You get the move, you get a 618, 786 retracement, then you go busting out. Amen? So minimum Magic Fibo slash zone. And what happens when the weekly's oversold and I get a PAI hook up? I buy. And if I just let that baby stay in ready to trade mode, because what happens if I close my account? Well, you got to leave your computer on, obviously. If you shut your computer down, but then you just turn it back on and get it back ready to trade mode and you're good to go. But I leave my computer running and I can let that baby run for weeks and months. The only other thing you need to do is don't let your computer go to sleep. So you come down in here and you type in power options and you get optimized power options saving. You open it up and you come into your power options and you tell it do not sleep hibernate right there. You click on it and you say never, never let my device go to sleep and never let my device hibernate. And you can turn your screen off, that's fine. But as far as the sleep and the hibernate, you're good to go. And this baby will sit for weeks. Going back to our chart, it'll sit in the ready to trade mode for a long time before it triggers to go long. Amen. So let's finish up. Silver is on a head fake. Is it a breakout? I'm thinking we're going to get a correction back down. At least we should get a correction back toward the Magic Fibo. I'd like to see gold collapse like we're talking about, go down hundreds of dollars. I think there's still a good chance silver comes back down to 25 or lower. I'm long SLV up to my $60, $70 target. We're definitely, listen to my words, we're definitely going to reach $60 and $70. But do we get this correction back below 25? I still think that's on the cards. Either way, I'm long SLV to 60, 70. And if we get anything lower than 60 and $25 into 25 and lower, then I'm adding to my SLV. And why do we think we're going to 60, 70? That's the beginning tip of the iceberg. But you come out to a weekly chart, you see the prior high, all-time high to the recent low, which was COVID. What is my targets? 60, 70. 60, 70. Given. Everybody with me? So this is a given. We're going to $60, $70. No ifs, no buts, no ands. That's where we're headed. So do we get the correction down to 25 or lower? Set an alert. I actually have some junk bids. I call my good till cancel orders at my broker saying I want to buy SLV in hundreds of shares. If we get down to 25 or lower, and the lower we go, the more I add, and I shoot for 60, 70. Got it? 60, 70. That's what we're looking for. So any questions? And even if you look at silver, same type of thing, 60, 70. First target would be 55, then 60, then 70. You get the point. But it too, unlike SLV, we haven't closed above that 618 retracement yet. We're testing it, but we hadn't closed above it. But silver will eventually do it. And SLV has already closed above that level. Everybody with me? We've already closed above that level long time ago. So that tells us, bingo, we're going to 60, 70. Amen? All right. Last but not least, crypto. I still think Bitcoin is due for a correction before the true breakout, but we shall see. I again want to see the markets follow suit. I want to see Bitcoin follow suit. So let's go to the daily price action. We're at a high and a lower high at the moment. I still think we're more in tune for this correction to come down toward the Magic Fibo. So be careful, at least the 618 off of this low to that high, potentially break out, but I'd like to see a bigger correction because again, what is wrong with this picture, Emil? Anybody see what I see? I see a 1, 2, 3, 4, 5. And if this is a correction, you do not correct in an uptrend 5 waves down. Right, Emil? Everybody see it? So we have a 1, 2, 3, 4, 5. So that appears to be the A wave. This is working on like a 3-wave correction and a B wave. And we need another 5-wave down and a C wave. So we're looking for this A, B, make that look more like a B, and a C. And I would not be surprised to see Bitcoin start correcting down into summer, like our markets, hint, 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 they start correcting down into like July or so. And then post, we go blow off top. And when the Dow goes 64 to 6,600, pushing more, not the Dow, but the ES, pushing 64 to 66, more like 66. NASDAQ pushes at 24 to 26,000, more like 25 to 26. And Dow pushes up toward that 45 to 50,000 range. Bitcoin's going to do what? Go to 150 to 175, and that will be September, October. It's kind of the plan for Bitcoin. Where does that come from? It comes back from the history of halving, process known as halving. Every blue line is the halving, and it's happened every 4 years. Started in 2012, way back here, when Bitcoin was new. And then in 16, in 20, in 24, the next one will be in 28. What have we learned? And I know you can't see much in a lot of lines and stuff, but every 4 years, post-halving, we get a 12 to 18-month run, followed by a big crypto winter low. Then we get a new low prior to the next halving, and it starts grinding into the halving, 12 to 18-month run. Then we get a crypto winter low. Then we start bottoming into the halving. We start climbing, and then we get a big blow off top. So if you start stretching these out, you can see what we're talking about. And in every case, you look at these levels, and from the high to the crypto winter low, Bitcoin is at least pushed a 1618/272 type of retracement. And off of this recent one, we got the crypto winter low coming in 22. So what are we learning? Every 4 years we top out 17, 13 over here. You can't see it. 17, 21. Guess when we're going to top out? In 25. We're in 25. So by the end of the year, we'll be topping out. And we fine tuning somewhere around September, October being that time frame. Where does that come from? 12 to 18 months post halving. Our last halving occurred in April of 24. So that pushes us into September, October of 25. Got it? And then what? Just like I told you back in 22 when markets were bottoming, I told you buy Bitcoin below 20,000 is the steal. It's an absolute crime to be lucky enough to buy Bitcoin at 20,000 and lower. And for months, I warned you that would be a great opportunity to start loading up. And sure enough, we're popped to 111, whatever the high is so far. And we still got a ways to go up to our 150 to 175. What else have we learned? Every time Bitcoin gets a winter low, it does at least a 10 to 20x by the time the post-halving 12 to 18 months later. So our latest low was 15,000 and change in 2022, and 10x from 15,000 and change puts us at 150 and change. Then you take the crypto prior high to low, that 1618 level is at 175 up there. You can't see it, it's overwritten right there, but it's at that 175 target. So that's why we're expecting much more upside to come. But I warn you, we're going to get a bigger correction down. So I'm going to zoom in real big, Harold, so everybody can see the candles. And we're expecting after a 5-wave down, right? That can't be the correction. It's over to go breaking out. That doesn't make sense. That it would be the A wave. This is the B wave, and we're coming down in a C wave. So I expect that our markets and crypto, etc., are going to give us a correction down into the next few weeks, push us into July-ish, something like that. And then we go ripping July, August, go ripping September, October-ish. Boom, go ripping up to 150, 175 or higher. All right, so what have we learned? I'll go to a 3-day. We already have what we call a nibble zone on this chart. And that is, we know Bitcoin's going to top out on, actually, I think I got it on this one. No, it's on that one. And we have the nibble zone way over here. So Mr. Tucson, I'm already anticipating long in advance, get a dip down in the 90s, bounce off the daily Magic Fibo, end of summer into fall, we go ripping up to that 150, 175. Then we get a crypto winter low into late 26, remember? We bottomed in 22, we bottomed in 18, we bottomed in 14, so 14, 18, 22. So when's the next one we're going to bottom? In late 26. And then we're going to buy it post-halving in 2028. So it's like a 3-year investment. Was that a bad 3-year investment? Buy Bitcoin at below 20,000. And 3 years later, in 2025, we're going to sell it when it's up at that 150, 175. Huge 1,000% gain and then some. That we expect to get a crypto winter low into 2026. And I'm kind of fine tuning somewhere between 50,000 and 30,000. So when Bitcoin gets to this nibble zone, likely going to be in late 2026, we're going to look to buy it just like we did here below 20,000. And you see where you are. We're going to do the same in 2026. And we're going to hold it till late 2029, post-halving 12 to 18 months. Pushes us out into late fall of 2029. And we'll be able to give you the high to the low and 10x, whatever that is. I expect Bitcoin will be in the hundreds of thousands as we go into 2029. Amen? So with that, I'll say good luck, God bless you. May the pips be with you. I'm humbled and honored to be your mentored instructor. Join us again tomorrow. And as we like to close, that's it and that's all. We'll see you tomorrow.